and welcome to the next panel. We'll be looking at innovation. We'll be looking at technology. We'll be looking at changes taking place, everyday changes that everyone is talking about. And many people, some people understand, others don't. We have two leading experts with us this afternoon to tell us how technology is changing things and what it is that investors are looking for. The traditional forms of investment are changing. We have many different changes, many different trends in terms of finance. Financing, of course, has become a huge issue with the increasing interest rates. So let's get straight into it. First of all, I'd like to welcome Daniel and Mete to the conference today. And perhaps we can start with a brief introduction about yourself and what it is that your company does. Mete, would you like to get things going for us, please?
Thank you. It's great to be here. Lovely city. My name is Mete. I am ex-serial entrepreneur, tech entrepreneur turned advisor. Happens to be most of the stuff that I did is now part of Proptech. So I'm one of the early ones in the industry. I'm old. And I am based in Dubai and Istanbul, both. Since 2018, I set up, as part of my daily job, advisory. So I also built the ecosystem, again, both in Istanbul and Middle East markets, through the initiatives that I set up called Eurasia Proptech and Middle East Proptech Initiative.
Thank you. Daniel, tell us a little bit about yourself and your company.
Kalispera, first of all. I'm sorry we have to do this discussion in English since I don't speak Greek, but I'm happy to be here. My name is Daniel. I'm part of the investment team of a venture capital fund based in Germany. So what we basically do is we invest in young technology companies in the real estate and construction industry throughout Europe and throughout the whole value chain. So could be software company for construction companies for the construction side, could be software in order to optimize the building performance, could be software for craftsmen. So as I said, throughout the whole value chain and very early. So that means the companies we invest in are typically maybe 3 to 10, 15 employees, maybe zero revenues or maybe a bit. We like to have some sort of product market fit that we can validate, but basically very early. And yeah, part of our fund are companies from the industry, so construction companies that are invested, project developers, housing companies, wholesalers, insurance companies, so basically all companies that are interested in the sector. And yeah, as probably all of you know, the sector has some obstacles to take. If we take a look at sustainability, 40% of CO2 emissions that come from real estate and construction, low productivity, and those are all things we try to solve by investing in young technology companies. Yeah.
Fabulous. Now let's start off with Proptech. It's a term which we hear about often. A lot of people are talking about it. We often read about the developments and the investments in the sector, but let's just start off with a little basic sort of thing on what exactly it is, Mete, and how it helps. I mean, in an environment where we do have increasing amounts of data, how does Proptech fit into all of this thing in the real estate industry? What is it that you see?
Billion-dollar question. What is Proptech? Well, it comes obviously the quickest answer is the property technology, but people usually, limit it with brokerage and advisors or agents. It's in a nutshell, it refers to all, doesn't have to be technology, by the way, that's the key part. Any business model, technology or application that A, transforms, B, now decarbonize, C, make it much more efficient, the whole chain of real estate, as well as how we deal with our urban environment, including mobility. At the end of the day, we spend 80% of our time in buildings. So obviously it doesn't have to be, a real estate, residential, but all sort of real estate. So I can say is that what brought you here is not going to take you further. So obviously, as we all know, everything is changing.
All right, good. Let me just interrupt. What is it that's taking us further?
Well, that's exactly what I was going to say. So certain things, some of the things that Daniel just mentioned. So there is an efficiency problem. There is a serious carbon problem. If we cannot decarbonize the buildings, and the easy part is the new ones, the hard part is the existing stock, we cannot meet the targets. So cement industry itself only takes 8% of the whole global carbon emissions, so it is critical. C, there is obviously an automation. The real estate industry had no idea about the customer or user. They had this term, tenants. But now it's the whole about customer experience, customer expectations, and the definition of customer is changing. Most of the existing developers, brokerage, the way they serve, the way they develop, is going to be severely changed. So it really depends on where you step on the wagon. Give you an example. So today, when I was in Amsterdam, a friend of mine asked me to buy an adapter. So I was looking for, normally, you expect that, super e-commerce, not e-commerce, super commerce like Best Buy or Saturn, you bump into a physical store. There is none. It was like 10 years ago. Today, the only thing you can find is online. So there is no big box electronic commerce stores right now. That happened less than 8 years, maybe 5 years, right? So everything is now changing. The way people actually search houses is obviously changing. It used to be newspapers, now it's on the marketplace. Spitagos is a good example there. Honestly, they've been doing quite progressive things, not only in the Greek market, but again, on the international one. But anyway, so the real estate marketplaces is pretty much like version 1 or wave 1 of this, Proptech transformation. And then everything started after those. Some of the subjects that are being discussed downstairs today are actually the core subject of Proptech or innovation or technology. I tend to not to use Proptech because it's something, puts you somewhere outside. It's not. It's actually really a part of it. There are now events, Daniel already know, a lot in UK, US, and any other markets, even in Middle East especially, specifically for real estate innovation and technology. And honestly, they are even more crowded than this one. So it's really becoming a thing. But again, the reason I'm telling you is because the whole program and subject is around that one. It's not like something in parallel or between.
Okay. Daniel, venture capital funds. I mean, it's an interesting term. It's always it's surrounded by a certain level of excitement. It involves the term alone just brings along with it a whole lot of innovation. You've been involved, you've had 2 funds that you've been involved in. The funding that you've completed, remind me of the funding that from the 2 funds?
60 million in total, yeah.
60 million in total. And the people who are backing, the investors who are backing these funds are construction companies, housing companies.
Correct.
So they want change, and they want to finance change via this particular model, this chain of events. So what is it that you're looking for when you're out there assessing the different options as a venture capital firm?
So first of all, there are a couple of motivations why companies invest in our fund. So the first one is obviously return. So investing in venture capital, gives you normally good returns. I mean, of course, it's very risky, I'd say.
What kind of returns are we talking about here, man?
20, 30%.
20, 30%.
Yeah. So yeah, it's basically very risky. A lot of companies that we invest in won't get big.
Won't make
it. Some of them will go bankrupt. Some of them will stay at a low, medium level in terms of revenue and market size. But those that really make it bring then the return. So this is basically one thing, return. But on the other hand, it's also access to innovation, really understand what's going on in the industry, what solutions are there to really improve the industry, to make it better. I mean, it's not that we just say, okay, it's fun to decarbonize the industry or to make it more efficient, but now we have a changed market environment, we have increased interest rates, we have regulatory pressure, so EU taxonomy and also domestic regulatory duties that need to be fulfilled. And at the same time, as I said, very low digitized industry. So a lot of things coming into one play, and our investors, they really want to understand, okay, what solutions are there? What could I do? Maybe not only what technology can I use to become better, but also what business models work under different circumstances, and how can I really change maybe my business model in a way that is better for the future. And we connect our investors to our portfolio companies, but at the same time, when we're really in the process of investigating if we really want to invest in a company or not, we also talk to our investors. We really want to see is there operational relevance also to them, and we also connect our investors together. We meet with them, and by doing that, we really have a good exchange on what's going on in the industry, what's important, what will be the next steps.
You've got a checklist.
Mm-hmm.
What's at the top of your checklist? When it comes to assessing a company you'll invest in.
So when you invest at that early stage, I'd say the most important fact is the team, not even the business model, but you really need to have a strong team. They don't have to be experts in the industry, even though that helps. But sometimes it's even better to have someone a bit outside of the industry who has another view on what really needs to happen. So I'd say team is important. So most of the time it's not just one founder. It's maybe one founder that is very strong on the technological aspects, so like a techie, CTO, something. And then you also need someone who's good at sales to really then, if you have built a good product, a good business model, to really bring it out into the market. So it's a complementary and really strong team. But yeah, we also like to have a business model that is at least validated in the first steps. So that means that we can see some sort of product market fit, what we call, so that you can really see, okay, there are first customers that really get value from the product, from the service. And overall, we also really try to understand the business model as a whole, and really go into the financials and really see, is it possible to make this company profitable in the future? But let me add one last thing. Profitability is not the most important fact in the first place. We know that the companies we invest in are unprofitable and will stay unprofitable for a while in order to grow the business, scale the business. But of course, there's a point in time where the company needs to become profitable and become a big company and then make good business. Yeah.
How much patience do you have? At what year do you want the profit to sort of emerge? And what?
So typically, we set up a fund for a time frame of 10 to 12 years. We have an investment period of 3 to 4 years. And then, there's a point in time where we also have to get rid of our shares. So I'd say on average, it might be 7-8 years that we hold our shares in that companies. Yeah.
Mete, I'd like to come back to you. One of the things when operating in a market like Greece, where data is thinner, okay, there's not much market transparency. Spitogas, one of the slides which they had in the previous presentation from Spitogas before, highlighted the issue of transparency. And one of the things they mentioned was that in Croatia, with a click online, you can access previous transactions conducted on a home. So you can see in the last 10 years what it was bought and sold for. In markets like Greece, this doesn't exist. Okay? And we have some time yet before we get there. So there's also this impression that the information's not there, so how much can really PropTech do for me?
Mm-hmm. Well, I am actually an entrepreneur, so this is also an opportunity. If there's a problem, the other side of the coin is obviously opportunity. By the way, when I was here right after the 2009 crisis, I remember there was a conference that met a group from the Bank of Greece. So they are at that time they started the residential property price index, RPPI.
Yes.
So they're not that bad. But I
That was
understand.
a big step back then,
True.
which the central bank did. They came out with the data. That's the thing you're referring to.
Mm-hmm, yes.
That was a huge development for the market.
Yeah, true.
Market, yeah.
Well, yes. So again, data obviously is the core. So we don't even need to look at property or real estate. So any in our pockets, our phone, even though you buy the most expensive one, it's not the phone. It's the data inside is the most expensive one. So the real change is actually coming from obviously yes user data, but also the buildings. So buildings are the one who are actually going to produce a lot of data. Most of the venues, whether it's the commercial one or even the residential one. So you probably heard the term, the smart building. So smart building, in order for building to be smart, it needs to make a decision, and the decision comes from the data. So from A to B, the data, sooner or later, will be part of the business. I can actually give you that my prediction that the 30% of the revenue in the future of real estate players will come actually from monetizing the data that they actually produce. In the last 8 to 10 years, most developed markets, they invest in, or the players in the most developed countries do use sensors or softwares that relies on collecting data through sensors. So they are sitting on a big chunk of data. Now they are in the process of using this for when they make a decision. But in the next 10 years or so, they are actually going to monetize this. So once you have a building already developed, if I am the newcomer trying to develop a similar product or a building, so obviously the data you already have is valuable for me. Doesn't have to be specific name, right? It could be anonymous. So again, for your specific question about the market that has less transparency, that really is honestly a political decision.
Yeah.
And I can tell you that Dubai was hit heavily on the latest crisis. First thing they actually do, because they rely on pretty much like three things: tourism, property, real estate, and retail. And obviously, COVID and the previous global turmoil hit, all these three. So specifically and immediately, what they did is they came up with RERA, Real Estate Regulation Agency. Same thing for the banks that we have in Europe. They immediately came up with this, and they.
How quickly did this happen there? I mean, this was over a space of how long?
Well, not more than probably 8 months or so. So they regulated all agents, all brokerage. The land department now, it's probably one of the most transparent market, except the names, individuals, obviously. You can get all the transactional data, not just price, but all attributes. All rental agreements are done centralized, so you can also access if there's any dispute, etc. So they've done, phenomenal job. Obviously, you can also see the transactions; they're, out of this world annually. So in any country, again, making transparency is a political decision.
Yeah.
But obviously, there are certain things that you can, or private sector can do by themselves. Some have, like marketplaces, they might create their own data. Other option would be the valuation companies. Each has its own, pros and cons. There's no certain answer, which this is the best data. But yeah, I mean, once you have the transparency, then it becomes much easier for you to
make
think
decisions.
for yourself.
To make decisions.
Would you make a decision that you know what's going to happen or not, or what happened?
Let me maybe add one quick note. What I think is so important about data in the first place, of course, data is very important to get the transparency and to use the transparency in order to make certain business decisions. But in the next step, it's also about taking the data and predicting certain things. Could be software that tells you what area to buy. It could be software that helps you retrofitting your building and really measuring the costs and the impact certain improvements have. So transparency is very important in the first place, but then you can do a lot more than that with the data, and I think that's where then the magic some sort of is happening.
And we are going into, we already did, but the AI world, really, right now. So obviously AI needs a lot of data.
Yeah.
So as soon as you have the data, you are, certain things are really going to be totally different. It's not something that right now, I was in GITEX, big regional event in Dubai, like probably literally thousands startups or scale-ups. And some of them still use, AI-based, AI, or intensive. So it's going to be like, I think it was Andy Grove, chairman of Intel. 1999, he said, in 5 years, every company is going to be an internet company, or there won't be any company. So same thing. So AI is going to be, part of the business, just like technology and stuff. Okay. So you cannot separate, again, technology or innovation from real estate.
Last question for Daniel. In less than a minute, I want you to tell us about how important or how decarbonization fits into everything. You spoke about the team, you spoke about the business model. it has to be at the top, it has to dominate. Where do you see the issue of decarbonisation?
Tough question, at least to answer it in a minute or 30 seconds. I believe it's a very important topic, at least when you look at Middle Europe, Western Europe, since you really have the regulatory that comes into play, and therefore we like to see business models that try to solve the carbon crisis, I'd say. So therefore that's good, but that's not the whole part of the cake. You know, sometimes you need business models that deal maybe with efficiency and different things that don't really focus just on sustainability. So I'd say it's always good to have a solution that has really relevance, and in some cases that could be because you improve buildings in terms of sustainability, but could also be other aspects. And then, as I already said, in terms of startups, you need a team that can really transport that vision and really brings that vision into a business model that has operational relevance. Yeah.
You did it successfully in less than a minute. Thank you very much. Thank you all for your time.
Thank you.